Welcome back to the deep dive. We're here to, cut through the noise and get straight to the insights. Today, we're diving deep into DocuSign. Yeah, that company. The one you probably think of for just digital signatures. But trust me, their story, it's way more dynamic than you might think. And they've just launched this major new AI-powered platform. It's aiming to solve a multi-trillion-dollar problem. So our mission today is to really unpack DocuSign's dramatic stock performance. It's been a real roller coaster. We'll also look at their kind of surprising pivot towards profitability and introduce you to this ambitious new AI platform, because this isn't just about signing docs anymore. It's a fundamental shift. They're trying to unlock efficiencies, potentially reclaiming a staggering $2 trillion every year for businesses. That's money just, being wasted on clunky contract processes, directly hitting the bottom line.
Absolutely. And you're going to uncover some, I think, genuinely surprising things about them. It goes way beyond just that digital stamp of approval.
Okay.
Understanding DocuSign's strategy right now, it can be incredibly relevant for businesses, really, of all sizes. Shows you where agreement management is heading.
Okay, let's unpack this journey then. DocuSign, they went public back in 2018, right? At $29 per share.
Yeah, $29. Pretty modest start, really, for a company that, pretty quickly became a household name.
And what really kicked things off was the pandemic, wasn't it?
Oh, completely. The COVID-19 pandemic essentially just supercharged demand for their platform.
Yeah.
It wasn't a nice to have anymore. It became an absolute necessity, allowing businesses to keep closing deals remotely when everything was locked down. And that led to this incredible surge. The stock just soared more than tenfold, reached a peak of $310 by mid-2021.
Wow.
Their service became critical infrastructure almost overnight.
But then, just as quickly, things changed. By 2022, conditions were sort of returning to normal, and DocuSign's growth slowed down a lot. And the stock, it collapsed. It's now trading, 75% below that peak?
Yeah, a huge drop.
Was that just a classic pandemic darling story? The correction hitting, or was something else going on?
That's the key question, isn't it? And it's easy to look at that drop and think the worst. And yes, the market definitely corrected. Those valuations were, let's be honest, pretty frothy. But crucially, the underlying business, it kept growing steadily. It wasn't really about their relevance fading. It was more a reevaluation of their growth path and, importantly, their profitability. In fact, as of July 21st, 2025, the price is hovering around $81.44. So yeah, way off the peak, but it sets the stage for where they're going now,
right,
which is quite different.
Okay, and where they're going sounds pretty fascinating. Taking on this huge problem. I mean, anyone who's ever wasted hours digging through old contracts or worried about missing a renewal date.
Right, we've all been there.
Well, according to Deloitte, the big accounting firm, poor contract management is costing businesses, get this, $2 trillion a year.
$2 trillion. It's an eye-watering number.
And it's not just a number, right? It's lost time, missed deals, constant frustration for businesses.
Exactly. So the obvious question is, how do you even begin to tackle a problem that big? And DocuSign's answer is this new AI-powered platform. They call it Intelligent Agreement Management, or IAM for short.
IAM, okay.
And this platform, it's got a whole portfolio of tools, and it's growing, designed to help businesses not just, draft, negotiate, close contracts, but, and this is crucial, to actually manage them effectively through the whole life cycle. It's really about preventing those costly headaches like an unexpected expiry date just sneaking up on you.
Right. Okay, so IAM, what does it actually do? Let's talk specifics. What are some of the key tools? Maybe start with Navigator.
Navigator, yeah. Think of it as like a smart digital filing cabinet for all your contracts.
Yeah.
But the real magic is how it turns this potential mess into, an advantage. It uses AI. It automatically pulls out the key information from every document, makes it all easily searchable with a special function. Imagine, never missing a renewal date again because the system flags it for you way in advance.
Okay, that sounds useful.
It really transforms contract management.
Yeah.
Takes it from being this reactive chore to more of a strategic tool.
And then there's another one, AI-assisted review. That sounds powerful.
It is potentially very powerful,
Yeah.
This tool, it can scan new deals and actually identify problematic clauses. And here's where it gets really interesting. It can even suggest replacement clauses.
Really?
Yeah. Plus, it sort of acts like a chatbot. You can ask it questions about the risks in a contract, and it helps you understand without needing to wade through all the dense legalese yourself.
Okay, but obviously, we're not saying AI is completely replacing the legal team here. Not yet, anyway.
No, definitely not yet. But what it can do is help cut down legal spending and, frankly, the workload. significantly. Businesses can actually set up pre-approved standards for the tool, so it knows what good looks like for them.
Ah.
Which means it remembers what to look for every single time, providing consistency, efficiency across all the contracts. So it's augmenting, taking away the drudgery.
And it seems like this IAM thing is already catching on. The early results look pretty good.
They do. International IAM sales, for instance, they jumped 50% in fiscal Q1 2026 that ended April 30th.
50% just from the previous quarter.
Exactly. That's a pretty remarkable jump. Shows there's real demand.
Wow.
And it highlights the growth potential here. I mean, IAM already has over 10,000 paying enterprise customers, which sounds like a lot. But then you step back, DocuSign has, 1.7 million paying customers overall?
Right.
So imagine the ripple effect if even a fraction of those existing customers adopt this AI platform. There's just so much room to grow here. They're really just scratching the surface of a very complex problem.
Which neatly brings us to DocuSign's financials, their strategy. In that same quarter, fiscal Q1 26, revenue hit $763.7 million. That's up 8% year over year. And apparently that was well above what management themselves had forecast. So things were looking okay on the top line, but how has their overall approach shifted? Because you mentioned profitability earlier.
Yeah, and this really reveals a critical strategic shift. If you rewind to fiscal 2021 that captured most of calendar 2020, the peak pandemic year, back then DocuSign was all about aggressive growth. They ramped up annual operating expenses by like 37%.
Wow.
Which, yes, it helped drive a big 49% revenue increase, but, and this is the big but, this growth at all costs approach, it meant significant GAAP net loss.
Okay, explain GAAP again for you.
So GAAP is generally accepted accounting principles. It's the standard way public companies have to report their financials, their actual bottom line profit or loss. And DocuSign reported $243 million in GAAP net losses in FY21, $208 million the year before, even $426 million the year before that.
So they were essentially burning cash to get bigger.
Pretty much. Heavily investing in growth, but at the expense of the bottom line.
But now it sounds like that's changed, a more sustainable approach.
Exactly. Now, DocuSign is being much more careful with costs. In fiscal Q1 2026, their total operating expenses grew by only 1.6% year over year.
Just 1.6%? That's a tiny increase compared to before.
It's a massive shift. A real focus on the bottom line shows a clear commitment to financial discipline.
And the results of this pivot, they seem pretty impressive.
They really are. Operating profits soared up 166% to $60.2 million.
166%?
And their net income, that GAAP bottom line, jumped 113% to $72.1 million.
Yeah.
So they swung firmly into profit.
Those are some striking turnarounds.
Yeah, and what's intriguing here is this focus on profitability. Okay, maybe it means slightly slower revenue growth in the short term compared to the pandemic highs, but it fundamentally secures the company's future, right? It also means investors probably won't face dilution from the company needing to constantly raise more cash.
Right, which can hurt existing shareholders.
Exactly. It's a much more mature, stable financial strategy, especially for a company that already has such a large customer base to work with.
Okay, so with all that context, the new strategy, the AI platform, the profitability push, let's talk about the stock itself. Back at that 2021 peak, DocuSign stock was incredibly expensive, wasn't it? You mentioned the price, but what about valuation metrics?
Oh, absolutely. Its price to sales ratio, the PS ratio, it surged to around 40.
40? That's high.
Extremely high.
Yeah.
And just totally unsustainable without that crazy pandemic-level revenue growth continuing indefinitely, which it obviously didn't.
So the correction brought the stock down 75%, as we said. But where does that leave the valuation now?
Well, this is the interesting part. Its PS ratio now is just 5.4.
Okay, 5.4 versus 40. That's a huge difference.
Massive. And just to give more context, that 5.4 is a really steep discount compared to the company's long-term average PS. When it went public in 2018, the average was around 12.4.
So it's less than half its historical average PS ratio. Now, normally for a company that's turned profitable like they have, we might look at the price to earnings or PE ratio. Why focus on PS here?
Yeah, good question. Usually PE is preferred if a company has stable earnings. But with DocuSign, their recent net income is still a bit bread. Well, the source described it as lumpy and unpredictable.
Lumpy? How so?
Well, for example, in fiscal 2025, they booked this massive one-off tax benefit, something like $819 million.
Wow, okay. Where did that come from?
Could be anything, like selling off a part of the business or a specific tax ruling. The point is, it was a non-recurring event, It artificially inflated their earnings for that 1 year.
Got it. So it skews the PE ratio, makes it look lower than it probably should be based on ongoing operations.
Exactly. So for right now, looking at the price-to-sales ratio gives you a clearer, more reliable picture of its current valuation relative to its actual business activity.
Okay, that makes sense. So putting it all together, what's the takeaway on the stock according to the analysis?
Based on that current PS ratio of 5.4, well below its historical average. The assessment is that DocuSign stock looks like a potentially very attractive buy right now.
Interesting.
It could be, a solid addition to a diversified portfolio.
Yeah.
Especially if you believe that this new intelligent agreement management platform will keep getting traction and really drive new demand.
Right. So we've kind of navigated DocuSign's whole journey here, from that pandemic surge, the big stock correction, to this really deliberate pivot towards being profitable and launching this innovative AI platform to tackle that huge $2 trillion problem. It really shows how important it is to look beyond just the daily stock chart and understand the underlying strategy, doesn't it?
Absolutely.
Yeah.
And that leads nicely into maybe a final thought, a provocative one for you, the listener, to consider. If poor contract management really is costing businesses $2 trillion a year, think about that number. How might these AI-powered solutions, like DocuSign's IAM, fundamentally change things, not just for the legal department, but for the entire pace, the entire risk profile of how businesses operate? Think about the efficiencies hiding in plain sight, the money being bled in areas businesses might not even realize are problems yet.
That's a great point. So the question for you listening is, how might AI impact your industry? Or even just the way you handle agreements in your own work or your personal life? Definitely something to mull over. Until our next deep dive.